CNBC TV18, embarking on a quarter century of excellence.
Hello and welcome to the CNBC TV18's Mumbai studio. I'm Sonal Bhutra. With me as always is Pavitra Parekh. You're watching MF Corner. Well, you know, Pavitra, we've been talking about how the mutual fund industry's AUM, assets under management, they've crossed the 50 lakh crore mark in the month of December. But now we need to understand how much of it really comes in from, say, tier 2, tier 3 cities or the smaller geographies as well. Because we've been talking about this equity or the mutual fund investing cult growing by the day, right? So what are some of the MF investment trends in these cities? So we have just the right person in the studio with us to discuss that.
Oh, absolutely, Mohit. Thanks a lot for coming down to our studios to discuss this. You know, like Sonal said, we're really seeing this sort of penetration. A lot is being done as well, right? Whether it's this new talk about the 250 Rupee SIP also. So there's a lot being done to really push that. But before we start on this discussion, you want to just take us through what B30 and T30 is? I think a lot of people might find that helpful.
Absolutely. Always a pleasure, Sonal and Pavitra. So look, I think long back, if I recall correctly, 2012 is when SEBI came out with a distinction of T15 and B15, which is top 15 cities in the country, and before, as in below top 15, which is the B15 kind of. And then I think in 2018, they revised their definition depending on the geographical location, the financial development of the city, the overall progress, the infra and facilities or the distribution channels in the city. They categorized the cities in top 30 metro cities, you might just want to call that, and the below 30, which is the next 30 cities. So that's the classification for the mutual fund industry to identify from where the assets are coming. Are they coming from the top 30 cities in the country, or are they coming from the tier 2, tier 3 cities, which could be below 30 or which could even be further below?
Okay, all right. So that criteria has been changed as well. So definitely there's a lot of focus and more cities, so to say, are investing more in mutual funds. So as I was pointing out earlier, we've crossed that 50 lakh crore mark and it comes to MF AUM. How much do these smaller cities contribute to this? Do we have a split in terms of B30 and T30 AUM in the overall portfolio?
Oh, I think you will be surprised to know there's a lot of research and a lot of data which gets published, not just by AMFI, but other individual players also every month on this. So currently as we stand, which is the October data, which I'll share with you, we have around 39 lakh odd crore, 39.4 lakh odd crore, which comes from the top 30 cities. And the next 30 cities contribute to almost 8.5 lakh crore of mutual fund AUM. And below that, which is the next level of cities, will contribute another 2-3 odd lakh crores. But the next 30, the B30 cities have relatively progressed dramatically over the span of last 10 years. If you were to check the percentage share of B30 towns and cities 10 years back, let's say in 2012, it was somewhere around 6 odd or 7 odd %, and it's gone up to almost like 25, 26 odd % and maybe even higher as we are talking. So the percentage jump has been phenomenal. The top 30 cities contribute the chunk of the bulky volumes and the bulky share of the AUM, but the progress of B30 cities has been fascinating in this country, and the way they are growing is marvelous.
Oh, absolutely. And, you know, the awareness is also growing so much. You really hear everybody now talking about wanting to get into mutual funds and to be able to invest. But Mohit, you want to take us through, you know, where the AUM growth is higher. I know you said that, you know, of course, this part still contributes a larger chunk because it has been investing for a longer time. And also, if you could give us some kind of details on how much the equity portion is on these.
Yeah. So look, if you were to look at this, the B30 cities were always struggling in terms of the overall development of financial infrastructure. A, because there wasn't very deep, thoroughbred distribution channels which were present out there. The people in those cities were always more fascinated towards investing in real estate or gold or physical investments, traditional investments like your FDs, so on and so forth. So it's been a long drawn battle of financialization of savings which has been happening in these towns and cities, right? And if you see the habits and the behavior also, if you study the individual AUMs, right? So the mutual fund AUM is split between individuals and institutions. The individual AUM is almost 91% of the AUM which comes from B30. The institutional AUM is hardly around 5 to 6 odd %, which means not many corporates or companies or non-individual clients from these smaller towns and cities are still investing into B30.
Oh, that's very interesting.
Yeah. If you see the top 30 cities, the contribution of institutions or non-individuals is almost 50 odd %, like 49 odd % to be precise, right? Which is a huge chunk which comes out of the non-individual investors in top 30 cities, whereas the story is completely different in B30. The AUM distribution also, if you see equity debt split, The B30 AUM is predominantly equity. 81% of the AUM is all equity, which means the investors are mostly doing those smaller ticket SIPs, investing into equity. They're not just bothered about debt, because debt they still believe more in traditional investments like your fixed deposits and other things, so on and so forth. So it's very interesting to see. However, the trends are changing, but the change is very small per se when it comes to the composition and the mix of investors. But yeah, it's a story in making.
And also, debt is not something that people, I would say, just go for, right? Because as you said, traditional asset classes like FDs or real estate, they feel more comfortable, especially, actually, most of them do feel like that.
Not as exciting also.
Like equities, right? But you know what really happened in March? B30 incentive was suspended by SEBI. It found that the incentive was being misused by distributors. What exactly does that mean? Did that impact any of the distributors on ground?
Look, I think it was again a long-drawn study which SEBI conducted in terms of whether an additional incentive was really helping and developing the channels in B30, and was it really getting new investors on board or not, right? So there was an additional incentive of 30 bips, which was provided if the sale or the investment AUM was coming from B30 cities for the first year, if the ticket size was limited to 2 lakhs, right? So what SEBI found out was there was a lot of abuse of this particular clause just to earn higher incentives. There was splitting of tickets which was happening, which means if the investment ticket size was 5 lakhs or 10 lakhs, it was getting split and broken up into 1 lakh to 2 lakh tranches and getting deployed separately. Or there was a lot of churning because the incentive was only for the first year. So after a year of completion or 6 months of completion, the money was getting churned out and moved into some other scheme, so on and so forth. So in the wisdom of SEBI, I think they thought that the incentive is not working in the right way. It's not fueling the growth the way they would have wanted it to be. And hence they stopped it, and now everything is at par. Though it's not like stopped, it's got suspended. And AMFI, I think, has to give some suggestions to SEBI in terms of how they can still try and work around with the B30 cities and figure out how they can incentivize more distribution and more penetration in those kind of cities. So I think that is work in progress, and I'm sure you will find some solution which is palatable to both the parties.
Okay, got that. So right now it's same, right, for B30 and T30, the commission structure?
Yes, as of now it's same.
Okay, got that. So that is on the commissions, and of course the distributors have had a big part in, trying to spread it. So maybe this will work out for the best as well. Mohit, we have a lot more questions on, how this expansion is really taking place, how the investments are looking in the B and T30. But we are going to take a short break for now. When we come back, we will continue this very interesting conversation with Mohit Gang. Stay tuned.
CNBC TV18, embarking on a quarter century of excellence.
Hey guys, welcome back. You're still tuned into MF Corner here on CNBC-TV18 and we still have Mohit Gang with us. We're discussing what investments in mutual funds really look like in the B30 and T30 cities. Mohit, we've been talking about a lot of the data. Do you think more measures are required in order to really penetrate, to get more investments? Is there something that you think the industry should be doing?
Oh, absolutely. I think, look, if you look at this data of top 100 cities also, Mumbai tops the chart and it's been always been topping since the time, times immemorial actually, right? So 12 lakh crores is the AUM which Mumbai holds, and then second is Delhi, which is 5.5 lakh crores, and third is Bangalore, which is again 1/3 of what Delhi is. And when you go below that, which is after top 5, the tail is extremely, extremely long. The 30th city in T30 is at 9,700 odd crores. And the 60th city in the, which is the B30 ka last city, right? So that is at around 3,000, 3,500 odd crore. And below that, which is the 100 city, is at around 4,000 odd crores or 2,000 odd crores.
Very small amount.
Very, very small. And then there is almost 8.5 lakh crore AUM, which comes out of the cities beyond top 100. Which is a massive distribution of AUM and a very, very huge tail, right? So there is a lot of scope and lot of effort which is required to get this entire chunk growing at a faster pace. But if you see the growth rates, they've all been growing at 20% to 30% kind of a range over last 2-3 odd years. But I'm sure the rate is still insignificant compared to what the overall scope of the entire financialization theme is, right? Massive amount of money is still lying in fixed deposits and real estate and gets channelized into gold in smaller towns and cities. So if you really go down the hinterland, I think AMCs have to work a lot harder. The branch networks have to spread far and wide. AMCs, I can understand mutual fund houses, they don't have the resources to open branches, but the PSU banks are doing a great job out here. They are kind of channeling into wealth management offerings and services and using their branch network to get more people. I think the IIPs, which is the investor education programs, which the fund houses do, they have to be more channelized towards the smaller towns and cities. And that's where a slightly higher amount of money needs to go in marketing from AMFI, from the fund houses in those towns and cities to conduct awareness camps and programs, which I think is still happening, but the extent and degree can be increased significantly out there.
So how much has the AUM contribution risen by over the last couple of quarters or years? We were just playing that bar chart as well, but if you can explain that to us as well.
Okay, so if you see the AUM contribution of B30 towns and cities was, I think, around 7 to 9 odd %, if I'm not wrong, like 10 years back, and today it is at around 25 odd %. So the rate of growth has been absolutely astounding. And if you see last year, which is October 22, to this year, which is October 23, the rate of growth itself has been almost 25% plus. Last year they were at around 6.75 lakh crores of AUM, and this year they are at around 8.4 lakh crores of AUM. Vis-a-vis, the growth in T30 is very, very small and minuscule, right? So if you compare the growth rates out there, it is low single digit kind of a growth rate. So the scope is huge, but as I say, even 20% compounding is not sufficient enough at that kind of a base. It is like India and US story, honestly. So Mumbai last year grew at around 10%, but at a base of 12 lakh crores.
The base is small,
right? So the base is massive compared to an Allahabad, which was growing at around 20-25 odd %, but at a base of around 9,000 odd crores. I think that pace can still be far higher and far more higher. So,
no, that definitely makes sense. Mohit, would you have the data on how much of this is via the SIP route, via lump sum? I'm just trying to understand, do people like that, monthly installment, go the safe way, or do they, try to get in one shot?
Look, you can at best make a guesstimate out here. Honestly, there is no published data which I had handy or which I think is getting published in the industry in terms of the split of SIP and lump sum data coming from the B30 cities, right? But what my best case estimate is that the bulk of this 81% equity composition is coming in forms of new SIPs. And that's happening by virtue of two things which are happening at a very, very mass level. One is the complete digitization story. The onslaught of all the new age digital platforms, they are reaching far corners of the country, and people in smaller towns and cities, in fact the new age college going students and the first time wage earners or the first time salary seekers are the ones who are actually going online digitally and starting a new SIP, right? So the SIP campaign I think is going extremely well. It's all new age, digital, And to some extent, I also think it's a factor of the PSU banks trying to increase the penetrations by using their branch network in smaller towns and cities. I think they are the ones which will usher in a lot of new investments coming in from those very, very small, which is tier 3 and tier 4 cities, because they are the ones who enjoy the branch network out there. So I think these are two factors which are...
Digitization, definitely. Everyone keeps talking about new apps and new ways, right? When we see these releases coming in from PSU banks, and this is what they are trying to actually achieve, ensure there's more penetration in smaller towns. But, you know, we also spoke about SEBI mulling to introduce that 250 rupee SIP. On a monthly basis, what do you make of this move? And some of the mutual fund houses, they are not so very happy with these comments. How does that work out in the industry dynamics?
Look, I think the ones who are keen on this are already doing it. Let me be very honest. If you go on few of the digital online platforms, you will find 100 rupee SIP easily available. And there are 3 or 4 fund houses who, in their select schemes, not across the board, across there's few select schemes which will be at best I think 10 or 15 names in the industry put together. They're offering 100 rupee SIPs also, and it's a huge draw. Let me tell you, it's a huge draw. The bulk of the new SIP which is coming in is because of this a single click 100 rupee SIP phenomena which is running through. Now SEBI is right when they want to come out with a sachet size ticket, because that's what revolutionized the FMCG industry. If you go long back, I think when Hindustan Liver introduced the shampoos and sachets, I think it just kind of changed the dynamics of the entire industry, which is what SEBI is trying to do, that at a uniform level, all fund houses should be able to offer 250 rupee SIP. However, it is extremely challenging and operationally very difficult because of SEBI's own regulations at the back end, which means that a physical statement has to go multiple times if a client has not opted for a digital statement. The operational cost of processing that 250 rupee transaction, the payment gateway cost, the RTA cost, the unit allocation cost, the maintenance cost, all put together doesn't justify the economics behind it, right? If you really want huge volumes, then you have to work at the back end also and simplify those operational things and payment gateway costs and multiple other things which are involved. So as of now, it's not a feasible idea, but I'm sure industry is working at a war footing on this one. And pretty soon you will find that 250 rupee SIP will be rampantly available. But for someone who wants to do, I think even 100 rupees is available today.
Oh, okay.
So you think, I mean, if this 250 is introduced, it's going to have that kind of huge impact whenever it does come through? Do you think it's going to have a very significant impact?
Oh, totally. Because look, there are a lot of people or part-time workers who earn on a daily basis in the country even today. So there are no fixed monthly salaries, right? There are people who earn daily wages, daily earnings, and they give it to those chit funds and other people. They give 100 rupee every day.
That money could be diverted.
That money could be diverted and could be channeled, and it will be a huge draw because that is all going into an unorganized kind of an economy. If SEBI can figure out a way to sachet size this entire SIP drive, right, I think they can just funnel in a lot of unorganized money into the system. It will find legal channel, legal means, and it will actually help the investors at a large scale. So I have domestic help at my house who was giving money to someone like this, which was an unorganized lady. She was giving in 1,000 rupee a month kind of a thing, and then we channeled that money into SIPs. She's extremely happy now, but I'm saying at a very mass level for people who earn daily wages, this will be a revolution.
Oh no, absolutely. And formalization of savings, that's the term we use so often, and that's exactly what this would aim to do. So ETFs, that's one segment that we talk about so much, that is also gaining popularity. Is this something which is getting a lot of traction in smaller towns, or do you think for now, because of lower awareness generally, this is something which could be limited to the T30 cities?
Look, I have a couple of thoughts on this. My first thought is, no power on earth can stop an idea whose time has come. That's a famous quote which I always go back to, right? And I think ETF is an idea, or passive funds is an idea whose time has come. Whether you want to accept it, you don't want to accept it, you want to deny it for longer, you can, right? And to each one his own on this one. But my sense is, though the penetration numbers in B30 are still very, very small, insignificant to a large extent, ETF penetration is hardly 2 or 1%, 1.9% in B30 cities. The gold ETF is at around 5% odd in B30 cities. It's all towards T30, but that's how the funnel goes down, right? The cascading effect of financialization started from Mumbai, went on to other cities, and now it's going down to B30 and below the channels also, and so will be the ETF story. It started in the mega cities. The numbers are astounding in all big cities and big channels or evolved channels. As your economy progresses more, as creating alpha against the benchmarks becomes challenging for fund managers, as the AUMs grow, the ETF story is here to stay, right? And as people get more educated, the younger generation, they are looking for quicker solutions, they are looking for one-click solutions. ETFs makes it that much more comfortable to trade, that much more comfortable to hold. So I think it's something which will grow with time. But as of now, if you ask me, the composition in B30 on the ETF front is very, very minuscule, very small.
Okay. I know this is getting into the finer details, but you know, within equity, we did speak about the fact that most of the smaller investments in these, you know, beyond 30 cities is coming through from the equity portion. Do you think most people are, you know, still going for the safer large cap funds, or do you think it's a lot of this mid cap, small cap rush? Because that is where people are looking at, you know, this.
Honestly, I'm glad you asked that, because I see a lot of adrenaline rush happening out there in the small cap and the mid cap segment. Even if you break down the SIP data, the largest chunk of SIP is coming in small caps and mid caps.
No one wants to miss this party.
And it's astounding.
Small cap funds getting launched, right? I thought it would stop after all of them actually stopped any investments.
Look, a lot of passive small caps are coming, or a lot of smart beta small caps are coming. As I'm talking to you, there are 2 or 3 NFOs which are open only on the small cap side, right? And all passive small cap ideas, because active small cap idea, I think the shelves are kind of full with all the
They're saying we don't want more money, please.
They're all taking it, right? Barring few. And the small cap overall AUM has crossed 2 lakh crores, which is huge. So I think very soon it will overtake the large caps also the way it is.
Oh my God. Okay. All right, new milestones every day. But Mohit, it's been such a pleasure having you here and understanding finer details of what the mutual fund investing trends are, right? So thanks a lot for joining us today, and thanks to the viewers as well for tuning in. But with that, we'll take your leave on the show today. Stay tuned for Closing Bell to take you through the last hour of trade.